Welcome back into another podcast. Today is going to be a special one because I've got Jake Claver coming over from Digital Ascension Group. You guys have seen him on the show before. You don't want to miss this one. We're going to be talking about XRP retirement strategies, but in general, how to use wealth to help you not only retire, but also grow your asset base. We'll get into all that. It's going to be a good one. Stick around for the whole show. And let's just jump right in. I want to kind of first, before we bring Jake on, kind of just remember that as we end the year, I know a lot of people are kind of up in arms about where crypto's performance has been. We get it. I completely understand, especially when you look at the performance of what we've seen with precious metals. We'll talk about that a little bit today. But I do want you guys to do one thing, and that is simply follow and like the channel, because this is going to take us into 2026. I think this is the year for all of us to be paying very close attention to what is going on. So I want to bring in Mr. Jake Claver coming in. How are you, Jake?
I'm blessed, brother. Appreciate you having me on again.
It's a good one. We're going to get into a full rundown today. It'll be a fantastic show. I want to bring in the topic right now of where price has been with XRP. We'll have to address that immediately. And if you look at where we are now, and the situation that has been brewing, and you and I talked about it this the last time that you were on the podcast, around the reverse carry trade unwinding, that has been a very soft approach by the Japanese government, where they haven't accelerated, the rate hikes as much as many people anticipated. What do you make of that right now? Where do you think it is in its current life cycle of an unwind?
I think we're right on the precipice here. They're walking on a razor's edge. All the bond yields that are over there in the Bank of Japan, for the BOJ, they're at 20, 30, sometimes all times high.
Yeah.
For the long end of the bond curve there. So, I think they're walking on a razor's edge, and I'm still sticking with my call for oil. I think that backs them into a corner if there is a spike in oil and causes inflation in their economy. They're already running hot. They're over their mandate, a little bit more inflation than we have here domestically in the U.S. And so if there's anything that exacerbates that, they'll be forced to raise interest rates aggressively to combat it. Yeah. And I don't think, they want to be the aggressor, and neither do the Fed, right? They need an outside catalyst or scapegoat that they can point to and say, oh, well, it wasn't our fault. We had to because of this situation.
Right.
That's my thesis. But I do think, it could happen this year. I don't think we're very far away from it.
So when you say this year, we're recording this on the 23rd of December. You're talking about 25 or 26?
25.
So next week?
Yeah, like within the next 7 days here.
Okay, so a potential there. Now, of course, when you look at that and kind of some of the indicators that are starting to trigger out, I don't know if you saw this morning. I put this out. Let me bring up the tweet real quick, and I'll share it with you. So this was my point. This, of course, is the GDP, of course, coming in hot. And that is 4.3%. Q3 GDP, this was smashing expectations at 3.3. This is a very unusual, what I think is a hot price deflator signal. And there's a couple of things that play into this, because you could say, well, this is risk on, but this inflation, nagging inflation that we have, continues to put a little pressure on it. Obviously, I think, all of these assets that I mentioned there, Bitcoin, ETH, XRP, and gold, that's digital gold, will benefit from this. And of course, we're seeing digital gold just cranking right now. I shouldn't say digital gold in general, just cranking. XAUT is the gold I like. But the thing that I'm watching right now is this employment data, man.
Is that Tether's gold?
Yes. Yeah.
Interesting.
Yeah. So XAUT, that's Tether's gold. Other than that, you can go Paxos. I know you're not a big fan of Tether.
I don't mind Tether, right? Like, I don't think it's going to go anywhere. I just think there's going to be some implications for USDT. The gold backing, they've been acquiring more gold than all of the other central banks globally. Just gobbling up the supply there to back that token. So,
So this may support your thesis, is that the strong economy creates an unwind, maybe pathway for Japan to start to maybe slide into this. And of course, this gets into the potential, the bigger structure here that starts to play into where is XRP in the grand scheme of things. And of course, one of the things you got to look at was this story right here. This, of course, is the CFTC, which is going to drop a crypto rule book. We're going to see it next year in Q1. I wonder if this is where CLIG actually starts bringing in XRP as a favorite asset. What do you think?
Oh, I think absolutely that's going to happen. I mean, so it's already trading on Bitnomial,
Yep.
the only regulated one here in the U.S. for commodities exchange. They have Bitcoin, ETH, and XRP that have been listed with the USD pair. And now you've got Ripple in position to capitalize on that with their acquisitions of G Treasury and Hidden Road. If XRP can be used as collateral for derivatives, similar to gold and other commodities,
Yeah.
it really opens the door for people to aggregate large portions of it and then take supply off the market, which benefits the price.
Well, and I think when you kind of compare the alignment here between the CFTC and also the SEC now with Paul Atkins lining up, and he's already kind of given the green light to a certain extent that there's going to be a lot more looser innovation rules, even if, this is the concern I have, even if we don't see clarity come through in 2026, or at least in early 2026. What's your prediction? Do you think we're going to get clarity through?
Yeah, I absolutely do. So when I was on Capitol Hill earlier this year in 25, lobbying with congressmen and women to pass the Genius Act and the Clarity Act, I was back in the summer.
Yep.
They got the Genius Act through, and that was actually what most of the people that we spoke with said. They think, it had already made it through the House. They had to pass it through the Senate, and they thought, okay, we'll be able to get this one through because it's pretty standard, like with stable coins, right? Like It's not overly complicated. There's just more complexity around the Clarity Act. And Democrats also, there's some points that they propose that I agree with them on. I want some counterparty to oversee these DeFi applications and there to be some recourse or something against bad actors. We've seen a lot of people get taken advantage of without that being in place. And so I think there needs to be something there that's a quasi oversight for that. And I think they're going to get it right. I do think it'll be Q1. Early Q1 that we do see clarity in 2026.
There you go, 26, early Q1. I'm skeptical but hopeful, that this will happen. Obviously, I'm a little bit worried about a potential shutdown in January. I'm also kind of concerned with some of these other bills that are, crowding into that December landscape. Granted, there are some key people that are pushing for the crypto legislation, which do change. Maybe will change some of the narrative. Of course, Senator Lummis, I think, is, her step down is kind of interesting to me because she's been the biggest champion, not only of Bitcoin, but of this. What do you think? What do you think that is?
That's the deal for me, right? So it's kind of like David Schwartz leaving as CTO at Ripple and moving on to the next thing.
Yeah.
I think it's done. I think it's ready to rock.
So they've just it's a rubber stamp. They're going to do it. She's either going to retire, but I anticipate she's going to go to work for some Bitcoin lobbyist. They all kind of slither into those roles.
Well, I can't. If I was in a government position and understood things extremely well for how things were going to be regulated and could help people lobby to get legislation passed.
Well, she knows where the bodies are buried for sure.
Yeah, well, and that's, again, I can't say I would do the same thing.
Yeah.
Her position. But I do think it's a little, not really in agreement with paying the salaries that we do to the politicians. If you look at, the way that the nation was founded, those people did that work for free. And they were prominent people that were well-educated and had status in society that sat in on those councils and made those decisions. It'd be cool if we could move back to a republic. I don't think that's ever going to happen. But but kind of circling back, her leaving, I think, is a rubber stamp. We finally got it across the line. It's just going to be early January.
Good indicator.
The 12th is when they can start working on that. But to your point, if they don't get it done by the 26th, a lot of their focus is going to be on the government shutdown around the 30th.
Yeah. For sure. Well, listen, we've got a lot to cover here today because we're going to talk about how to retire.
That's right.
Everybody wants to talk. I've got 40-year-olds now talking to me about how to retire, and I'm like, you guys are thinking about it at the right time, but you definitely, and I don't know, do you think the mindset has changed a little bit with our younger brethren that they just want to get away from the rat race? What is it that's driving this 40-year-old retirement
Well, so
craze?
I look at life in sections. Okay, and I think you have seasons for stuff. This is not my paradigm. This is Patrick Bet David, which I
Yeah.
kind of subscribe to. So, first 20 years, just don't mess up. Don't put yourself at a disadvantage. Don't be in the wrong spot at the wrong time, type thing. Next 20 years, you want to build wealth, right? So, a lot of the time that is through a business, starting your own
Right.
enterprise, becoming an entrepreneur, working for a large corporation as C-suite, learning the skills, traits, and beliefs to be able to have substantial income and financial stability by the time you're
Hmm.
40. And then at 40, you get to start reinventing yourself.
Yep.
So, you're still young enough that you can travel. If you want to have more kids, you can have kids. If you wanted to pick up art or singing or whatever else it was, all the things that you kind of sat on the back burner when you were really focused on building financial freedom, you can now do those things and put your attention toward that over the next 20 years. And then the
Yep.
last, period of your life after 60 is really just about giving back, either philanthropically or as a professor or a mentor, whatever way you can, with your wisdom and life experience. And so, for a lot of people, again, I think butting up to that 40-year-old point, life expectancy is around 76 here in the US.
Yep.
And so, that gives you the whole second half of your life to enjoy the fruits of what you've done for the first half of your life.
No doubt. Well, I think the key here is that this era is completely different than it was 20 years ago if you were turning 40 at that time, in terms of opportunities, both on the landscape of what crypto brings to the table, but also I think just in general investing. There's so much more information. The
For sure.
tool set are almost, I won't say equal, but they're rivaling now institutional in terms of the analysis tools and even the execution tools for trading. So there's a lot there. What are the first steps? Let's use it as a three-parter in the
Okay.
sense of I'm a 40, I'm a 50, and I'm a 60.
Okay.
What are the first steps of a retirement strategy?
Well, so I'm not a financial advisor, and our group over there at Digital Wealth Partners could absolutely run you down what's going to be best in your specific circumstance. But just
Yep.
speaking to age and time horizon, risk tolerance would play a factor, right? You might be 40 years old and have very low risk tolerance, and you
Mhm.
might want something that's going to be
Let's
more
just assume
flexible.
everybody has medium risk tolerance.
Okay.
Yeah.
So then you'd probably have a blended portfolio at all ages, right?
Yep.
But it would regress toward more conservative as you scaled up in age. So a 40-year-old, because you do have a longer time horizon, might be able to play in private equity or things that had higher upside potential because you have the time horizon to be able to, wait for
Yep.
those returns.
Right.
Whereas if you're 60, you're probably looking at annuities or mutual funds or things that are going to pay consistent income for you, and you may dabble in some of the private equity, but you don't have 5 or 10 years for things to play out and get that big upside unless you have a very large portfolio and you're looking to leave that to the next generation.
Yeah.
um, so
Okay,
if
so
you're
when you look at that, because you've got kind of the variables there, and I want to break it down into digital assets, precious metals, and
okay.
stocks, and then businesses. Is there a
Okay.
mix of how you would spread that? Some people may not have a business, so some people might be ready to start a business, you know?
I can speak to clients that we've met with and their positions. I won't, disclose who they are or what they do, but kind of how their portfolio is structured at those different ages, if that's
Right.
helpful. So you did mention real estate. That tends to be a component also. Most of the larger family offices that we work with, their cash position, treasuries, low risk investments make up somewhere between 20 to 30% of their total portfolio.
Okay.
Bonds, the low risk stuff. Stocks then will make up, another 20%, maybe up to another 30%,
Yeah.
depending on if they're owning specific stocks or just diversification across ETFs or, larger indexes. Um, that's kind of the stable part of your portfolio,
Mm-hmm.
right? There's going to be some volatility in the stock market. There's going to be some volatility in bonds. But if you're in dividend paying stocks and you're in, annuities or bonds or other things that are going to have consistent income,
Yep.
make up half your portfolio. And these are for people I'm going to give you, that are affluent, somewhere between minimum 10 million and up. Okay. Um, the next portion of their portfolio, they might have another 10 to 20% in real estate, um, just to give them some uncorrelated returns and cash flow. They also might want some cost seg on those properties to be able
Yeah.
to offset the income that they're getting, and get the tax benefits that would be associated with that, which you're not really going to get from, bonds or annuities or stocks. You
Right.
want some, and you talked about businesses.
Mm-hmm.
There's a lot of things you can do inside of a business to be able to spend some money, finance some things, and get accelerated depreciation to be able to offset the income that's being produced across your portfolio.
Yeah.
So that might make up another, 10 to 20% there. And then, most of the larger net worth people that we work with, it's going to be somewhere between, 1 and 5% of their total portfolio in crypto.
Yep.
Now we do have clients that it's 90% of their portfolio currently, right? They are very aggressive, and these are probably the people that are closer to the 40 year old mark. Now we do have people that are older that are also aggressive because they see the opportunity here. But post price appreciation, if you're talking about retirement, I look at wealth like a tree. So the core of whatever it was, whether that's your business that you grew and exited,
Mm-hmm.
or the industry that you made your money in, or the investment that you made, is probably still the core thesis of your wealth over the long term. But as it
Right.
grows, it spreads out, right? Like you have branches across all these different verticals. And if a portion of the tree, has some fungus or gets struck by lightning, the whole tree doesn't die,
Yeah.
right? It's got other branches and other areas that continue to feed it. So I think a lot of people kind of put the cart before the horse. If you don't have $10 million or more, um, not to say you shouldn't be diversified there. Like that's probably the point where you should start looking at that. It's really how much you need to even start considering retiring today.
Yeah. Yeah.
If you're making 5% on a $10 million portfolio,
Sure.
and you're conservative, that's $500,000 a year. That sounds like a lot of money, but after taxes,
Yeah. Not
uh, and everything you else
these
you
days.
pay,
Wow. Can you
it's
imagine that saying 100? Well, I just saw the basis for uh, poverty was 140K in the United States
I believe it. Especially, you got to factor in certain jurisdictions, right?
for
So both
family.
California and New York, if you're making 140K in either one of those states,
Yeah.
you're
Yeah.
barely scraping by.
Yeah.
Now, if you're in the Midwest or you're here in Texas or Arkansas, you could be living large.
Yeah. Yeah. It's well
140.
the real estate starts playing
Um,
in cost of some goods and yeah.
yeah, so it just depends on where you live. But as a nation average, that I think that makes sense to me. If you're doing less than, I probably would have said 100 or 120 between household income. But again, I'm biased. I live here in Dallas, so I look at it from that perspective, probably not taking into account, some of
What
those
is
other.
your take on the two things? I want to go down the business side of things because more and more people I talk to are building LLCs in Wyoming,
Mhm.
and that's a very crypto friendly. So if you got anything to do with crypto, it's very crypto friendly in general. But they're also fairly friendly to LLCs if you're launching online businesses, or even if you're restructuring a business and you go out and buy one and you want to set your LLC up there to start building in asset protections, all those kind of things. My friend Mark Kohler, we're talking about this all the time.
Mhm.
He's a big tax attorney and advisor, and he gets into this about how to build certain parts of your business to do. And you just mentioned it slightly there. How big of an opportunity is that for somebody that maybe doesn't have a business right now?
Um, so the way we structure things is it's a holding company there. You're not effectively doing business in whatever state
Hmm.
you are residing in. And so, way we have it structured, you don't have to do the foreign qualification.
Yep.
So there's some benefits there. But if you're going to run a physical business that where you're going to buy physical goods and have an operation, you would absolutely have to file a foreign registration for your company. Um,
But
so,
if you're
just
online and you're based in Texas and you're just using it, kind of like the Delaware corporation
correct.
scenario that plays into these,
Yeah,
uh, that would be okay.
correct. And then there's, some states don't have state tax and they really don't care a whole lot. But the ones that do absolutely do.
Yeah.
Um, so, I would work with a good tax attorney if you're going to structure this stuff and understand, that there's going to be some nuance to things, but it does benefit you if you are going to buy, heavy equipment for whatever that business is,
Hmm.
or a vehicle, software.
Yep.
There's some other things that you can do with that under Section 179 of the tax code.
Right.
Um, Again, properties, real estate is always a big play, and you want to silo that in its own LLC. I've seen people try to file an LLC in like Alaska, which has really favorable real estate
Interesting.
laws,
Huh.
to hold their property in Texas or somewhere else. It never ends up holding up in court. You always want to just structure the LLC wherever the property actually is in
Yeah.
whatever state.
Okay.
Um, but yeah,
But what
there's
about if you're dropping digital assets in there? Let's just talk XRP.
yeah.
Maybe you have a handful of other things, HBAR, Stellar, maybe Bitcoin, whatever it might be. What is the best way to, one, protect that for long term,
Mhm.
and two, get the most from it? Because you've got companies out there like Flare, who's got some yield products out there. Now some of these wallets have yield products built into them. What would you say?
I mean, I'm really biased because I think we offer the best solution that's out there, but I'll kind of keep it high level. Again, like people don't have to work with us. I just want people to be educated when they're having the conversation with a professional so they
For
understand.
sure, for sure.
So, Wyoming is fantastic. You're going to get a lot of creditor protection there in Wyoming. They adopted laws, like you mentioned, from both Delaware and Nevada in the way
Yep.
that they've structured their corp company um, regulation. And they are very favorable for crypto. So we've set up close to 7,500 LLCs for people to manage their digital assets out of Wyoming,
Okay.
just like you talked about. So XRP, XLM, HBAR, a lot of the utility-driven assets. We do have people
Mhm.
that hold Bitcoin, ETH, Solana, Matic, Chainlink, whatever you could think of inside of that corporation. And it's a holding company. If you set up a trading company, which might be the right thing for some people if they are trading on a more regular basis,
Mhm.
you're not going to get the benefit of long-term capital gains tax. If you
Yep.
set up a holding corporation, it's just to hold assets, and you get the creditor protection. So if somebody sues you, you were in somebody and they find out you got some money,
Right.
as long as you've maintained your corporate veil, you've done your meeting minutes, board resolutions, all the stuff you should be doing,
Mhm.
which we help people with, you're going to have the creditor protection. They're just going to be able to put a charging order against that company, but they can't liquidate any assets or take anything from you.
Right.
We pair that often with a living trust in your state that could be revocable or irrevocable, however you want to structure it. It's going to have to be in the state that you reside in whenever you're filing it. You're going to want to work with a local attorney that we can, connect you with. We do that for $500 until the end of the year, and then we're moving that to 1,000 because we're way underpriced on that deal. All the other people that we've talked to are like $1,500 for a living trust.
Yeah.
Um, but you get the probate protection there. So it's not creditor protection for that type of trust. Most of the time, that's going to be for assets that you intend to use, or you need some, flow through estate planning. So you'd make an assignment of your equity in the LLC to that trust. God forbid something happens to you and you pass away, the beneficiaries of that trust would receive the equity and the assets inside that LLC.
Yeah. Yeah.
Same thing with your house. So if you've got a home, vehicle, vacation homes, toys, family heirlooms, gold, silver, probably want to put that in your living trust. Now, the gold and silver, if you are managing assets, you may want to put that in the LLC. We've seen people do that. Same thing with private equity. The way that we structure the holding company is it is an alternative investments holding company. So don't really hold traditional stocks or things there. But if you are invested in having, precious metals
Yeah.
or crypto or private equity, all of that works with the way that we've structured the operating agreement. And again, you could go get with an attorney in Wyoming and they'll write it up for you. Most of the time, attorneys are going to charge you somewhere between $1,800 and $2,500 just for the operating agreement.
Hmm.
We're $2,000 for the whole thing.
The whole thing.
Yeah.
That sounds like a deal, man. What
Well,
about this one area that Mark talks to me about a lot, and it's this thing called a CRUT. Have you heard of these?
yeah. So charitable remainder trust.
Is that a good thing? Because it sounds to me like you're using it as a vehicle to earn income, but never paying tax on it, and then the money has to go to some sort of charity
Yeah.
at the end.
So
Okay.
it's a tool. All these different types of trusts. We'll do ILETs, intentionally defective grantor trust, asset protection trust, dynasty trust, whatever the client needs. And we can weave in spendthrift provisions. There's a lot of stuff that goes into more complex estate planning.
Right. Okay.
The CRUT has been used very effectively if you're going to take large profits in crypto as a way to be able to offset that tax.
Yeah,
and
the
also,
tax hit itself. Yeah.
we have a way to hold crypto inside of a CRUT. Most other people you're going to talk to or tell you can't do that. We have a way to meet all the regulations and do that. So you can donate your assets in kind. They can produce revenue, and then again pay yourself like you mentioned.
Yeah. Which is tax free.
Correct.
Yeah.
And you always want to make the donation to the CRUT before you sell,
Yeah.
because then you're going to get that full deduction. You're not going to have sold,
Yeah.
then donate it, and then have to. Yeah. So.
Well, and there's a lot of people that are in that position right now. I've got a one analysis where one of our, because we hold these private wealth seminars here in Florida, and a couple of these business entrepreneurs came to me, and they had just initiated a CRUT to basically put their business in. So they put their entire business in this thing, which is a money generator for them. I'm not sure how that works if that's a profit entity.
Yeah, it's fine. So nonprofits can own for-profits. It's just that a for-profit can't own a nonprofit.
Okay, gotcha. Okay, so that the structure still works because it could be real estate, stocks, cash, any of those kind of things.
There's some specifications and requirements for the assets inside of a CRUT, and they have to be structured a specific way to mitigate risk. And there's a lot of nuance.
Talk to me about the mix. All right. So I'm in the 50 group.
Okay.
So I have a mix of stocks, precious metals, crypto, some bonds, real estates, and businesses. Those are my mix. And, I won't reveal what that mix is, but they're in there. What would you say should be the weight of those kinds of assets?
Well, you're going to have to rebalance. So Kevin O'Leary does a good job of this at scale, but Kevin's a billionaire, right? So the way that his mother managed her portfolio was she never had more than 20% of her total portfolio in one asset class, and never more than 5% of her total portfolio in one investment.
Okay.
And so as things
Gotcha.
appreciate or lower in value, you would probably rebalance across the portfolio to continue to meet those requirements.
Okay.
For diversification and wealth preservation, fantastic. Now, if you're looking for, I don't know what your long-term goals are, right? So let's say, you're thinking about growing your business and you need some cash next year. You're going to need some cash. And you have an investment opportunity right now that you think is going to be pretty significant that could generate that cash or be able to create an asset that you could borrow that line of credit against to invest in your business. You might be a little more aggressive with that, depending on what your total amount of assets were. Right. Again, if we're talking 10 million or more, you probably don't have to be as aggressive, especially if it's a large asymmetric bet like crypto is. But if you had closer to the $1 million mark, you might be more heavily weighted on, something that's a little bit riskier.
So
to other
a little
people.
bit toward the risk level, depending on where you fall. And you could probably correlate this down, at the 10 million mark, 5 million mark, 1 million mark, and even the, $500,000 mark, if you weighted according to your age. But do you still recommend a full portfolio of all investment classes? Because there's some guys out there that are really heavy on digital assets only, and then a little bit into stocks and bonds.
Well, so that's what we currently manage. We manage about $1 billion in AUM that's crypto
Okay.
at Digital Wealth Partners, and we do have maybe 30 to 50 million in TradFi assets.
Mm.
So our clients are very heavily weighted
Yeah.
on the crypto side, or the portion of the portfolio that we manage is just the crypto portion.
Okay. Okay.
So, like the lower the net worth, um, and I'm just going to say, again, I'm not advising this. I'm just seeing what we see for our client
Sure.
base.
Yeah. This is all based on performance of other. Yeah.
Yeah. I tend to see a heavier weighted allocation to crypto the smaller amount of net worth people
Okay.
have.
Yeah. Well, because the upside, they're taking, it's a big risk, but it's like anything. It's kind of like when you look at startups.
Correct.
I know when I was doing startups, all my investment was in my startup. So I was heavy into one particular asset class.
Well, like I mentioned, the tree, right? Like when
Yeah.
it's a sapling, it requires all of your
Yeah.
time
All the fuel, man. It needs it all.
to
As
get
they
it
say,
to a big
all the
enough
money,
size. And
all
then,
the money.
3, 5, 10 years later, when you have a tree
Yeah.
that can support
Completely
very
different
fruit,
shift then. You can start to diversify a lot more. All right. So we've talked about LLC setups, trust formation. Again, these are not financial advice. What this is hopefully doing is giving you guys ideas of who you can go to in terms of your attorneys, your tax advisors. But hopefully it brings out a lot because I know with both Jake, he has deep access to people he knows who have done these things. We do it here as a practice. So this is how we do it. But it doesn't mean this is the way you would do it if you're watching or listening to
yeah.
this now.
Well, and again, you just want to seek out good advisors
Yeah.
before you have
Yeah.
significant
Get you a good
appreciation.
team. You know?
We tend to recommend that people start to look at an LLC somewhere between $50,000 and $80,000 in their
Oh,
portfolio.
wow. That early.
Well, and
That's
again,
amazing.
this is just for most people, that wouldn't be a good idea. Like if it was, if you just had that much in stocks or something else,
Yeah.
that it wasn't going to escalate quickly.
Mm-hmm.
I think that crypto is going to have a meteoric rise in the near future, a Cambrian explosion here in 2026.
No doubt. Yeah.
And so with that aggressive price appreciation, you can very quickly find yourself over your skis. Let's say, you did have something go 1,000x from the $50,000 level.
Yep. Yep.
You're now at $50 million.
Mm-hmm.
Next year in the US, the lifetime gift tax threshold per person increases to 15 million. So between you and your spouse, you would get 30 million. Well, you probably want that in an LLC because one of the hacks that we work with people on is you can gift small portions of the equity
Right.
to, your children or friends, whoever you want to take care of.
Start carving that out.
When you get a 409A done, now you're going to get a devaluation on the equity, even though the assets are worth 50 million inside the company itself would be worth 25 to 35% less.
Right.
Yeah. And so now you have that right at the gift tax threshold, 30 million, that you could move out of your taxable estate all at one time if you wanted to.
Yeah. There's some of you that are probably setting up for, because if you've been in altcoins, most likely you're down consistently. If you have sold some of your profit assets this year, some tax loss harvesting would be a good strategy. If you made a lot of money on selling some XRP or some Bitcoin at 126 or some Ethereum at $4,000, some people might be setting on some cash profits this year. They haven't gained much in 2025, but the years, if you purchased prior to that, you probably have some pretty significant profits. So tax loss harvesting, get on it.
What do y'all think on the wash rule?
Do I like it, or are you talking about the wash rule that they're putting into the Clarity Act?
So they're going to put it in the Clarity Act,
yes.
Right? But right now, as of 2025, if you've got a CPA that's a bit of a cowboy,
sell, rebuy.
Yeah.
Yes.
And you don't have to wait the 30 days like you would for stocks.
Right. Yeah.
I think
a lot of things that we've had to our benefits may be going slowly away.
Yeah.
Unfortunately, with regulation, because that's kind of one of the things. And again, we don't even know if Clarity is going to get through. So that in itself is going to be something else. Let's talk about 26.
Yep.
What does it look like to you right now? Many people are claiming Bitcoin could see another all-time high. It's like a 50-50 group right now. I've got Tom Lee on one side spouting to, $8,000 Ethereum and a $200,000 Bitcoin. I don't know if these analysts are on top of this or not. What do you think? Do you think we have a big year for Bitcoin?
Um, I'm going to be unpopular with this call. I think we're in for volatility. What does that mean? I think you could see $190 Bitcoin. I think you
Sorry,
could see
190K or
$190,000 Bitcoin.
okay, all right.
And I think you could see a $20,000 Bitcoin
Woo.
all in the same year.
Wow. Okay, so heavy volatility. Man, this is knowing when to exit, guys.
Yeah. When you never go broke taking profits. I do think there's going to be volatility, and so taking leverage on stuff or significant amount of borrowing against your assets. We talk about that all the time as a one fact. There's no, taxes if you borrow against your assets because it's debt. But if you get a little over leveraged and you can't meet those capital calls, now you're in a bad position and you lose that collateral.
Yeah.
We do that with tri-party agreements out of Anchorage. We provide people lines of credit against their Bitcoin, their XRP, whatever that might be. And the way that I like to do it versus a smart contract is the partners that we have will give you some time to cure those things.
To even up. Yeah, we've seen that because I know with Morpho, they'll liquidate you quickly if you don't keep that LTV down below whatever your target zone is. But I think most people are probably hanging in that 30 to 50% LTV anyway, loan to value out there. So that's a very safe, unless you do get one of those volatile spikes down.
Well, 10-10, we saw
exactly.
a drop in the market. There was a lot of people that got liquidated during that period. We had no assets called away. None of our clients, we had about, I think, 40 million in loans out at that time, and none of those clients' assets were called away.
Okay. Well, that's good. I mean, do you think we'll see another event like that in 26?
Could be sooner. Like I said, here in 25.
Some of these market makers, what was it? Somebody told me it was after a podcast and I was on with a Wall Street analyst. He said that there were some major market makers that went down, like they're gone from just that event. So
it pulled a lot of leverage out of the system very quickly.
Yeah.
I mentioned Tether. I think you could see Tether depeg if we do see the reverse carry trade unwind at scale.
That would be
huge. You had losses in Bitcoin, and I think gold could see 2,100.
Woo!
Yeah, I don't think it'll be there long, but I think you could see both of those things drop very quickly when the reverse carry trade unwinds.
Just so we know, I'm going to timestamp this right here because this right here is where gold is trading right now.
Yeah.
Which is at 44.70, another all-time high.
Yep.
And then you look at silver holding in,
70.
Crushing $70 right now. We were doing videos on silver back here, guys, at about $33. So if you were watching our videos, you're welcome. It was a short run. Now, I don't know if that means we're going to $100, even though I've talked to a lot of people still think we're going to see a $100 silver and a $5,000 gold,
Yeah, I think those are reasonable numbers. So if you look at the gold to silver ratio, historically, it's about 40 to 1.
Yeah.
And silver still got a bit to run to get to that, right? At a $4,500 gold, it would need to be around a $90 silver.
If you were deploying asset cash right now, let's take a look at XRP. It's depressed down here at 188. Great time to DCA. Okay. This is way undervalued right now.
Yeah.
You could look at something like XLM, also setting in very undervalued right now. We just did a deal on Uniswap. I'm watching this one very closely after that 30% hike, that we just saw. And then you've got HBAR and a handful of others that could be playing into this. There's HBAR also holding in at 11 cents now? So this is crazy. And these are utility products, guys. So
they're not today, right?
Yeah.
Like all of this is speculation today, but in the very near future here in 26, I do think you're going to see price movement on a few of these assets before the Clarity Act goes.
Yep.
And then post Clarity Act, they'll have enough liquidity in them to start being used at scale, and the banks will have, enough volume to hold price stability. I think the charts will look very different
Right.
in 2026.
S&P 500, as we're recording, about to hit 6,900.
Yeah, that
Would
one's
you have ever called that? Tom Lee called 7,000 by end of year.
there's I can't think of David's last name. He's a well-known analyst. He's on Twitter. He's been on multiple podcasts. I watch him. He called 7,000 S&P,
Yep.
and this was like in 2020,
Oh,
like a long time ago. And he said that would be pretty much the peak, and then we would see, a big red candle.
yeah.
And I don't think he's wrong. I think, again, we're right on the precipice of the reverse carry trade happening here.
I
You
mean,
can see how aggressive this climb's been.
the only era that we saw that kind of move was right here in 2008. And I'll zoom in on this for everybody. I'll just go right there. This is on the monthly chart. But if you look at just where we were right there, '07 October, I remember when that date hit and we saw the S&P unwinding, 53% right there in a matter of March '09. Woo, that's 17 months. So that is the kind of, imagine if you unwound 50% in that period of where we are now.
I don't think it's going to take that long. I think with the leverage that's built into the system, it'll be. Can you move to 2020 where we saw the drawdown for COVID?
Yeah.
I think it's going to look very similar to that. I think it's actually over here, a little bit.
You're
further
talking about this one right here.
Yeah, some big candles to the downside.
But that was short-lived.
Correct. And then we had a V bottom out of there.
Yep.
I think that we could see.
That was the rip off of January of 22, which came down. What was that percentage? Let's take a look real quick. From that top down to that wick, we were still down 27, but it wasn't a 53. I mean, you're talking about a 53 move. If you were to pull that in right here from the top, we'll just move it to where we are right now. You're talking about a 3,000, basically a 3,000 S&P, and we're closing in on 7 right now.
4,000, 3,500, I think, is very likely if you see the reverse carry trade unwind at scale.
Where would other assets be? Would risk be just being pummeled? Do you feel like XRP is going to come out of this differently than others? What would be your
I think
case?
they're gonna need to move to real-time settlement on the back end of the stock market to de-risk from the Bitcoin ETFs.
Yeah.
There's absolutely systemic risk at this point, and Bitcoin trades not quite real-time, but pretty close. And the stock market, the market makers settle T+1.
Yeah.
So they're going to need to move to real-time settlement. We listened to, Monica Long interview the president of NASDAQ at Swell this year.
Yeah.
And she actually spoke about, distributed ledger technology being implemented on the back end of the stock market for reconciliation and settlement between the clearinghouses and brokers.
Right.
And so I do think that that's going to be the first application that we see for this type of technology. And I think XRP is going to sit squarely in that position, but they're going to have to drive enough liquidity into it. And the only way that they're going to get that there is if, BlackRock rolls their ETFs and we do get this supply shock.
This is the one that worries me most right here is MicroStrategy. This positioning right now at 159, even though some people say, and I know went back in, Michael Saylor going back in on Bitcoin again, as it hovers another down off the 90K down into 88 as of yesterday. So I get a little bit spooked by this one right here because this has a lot to do with how these digital asset treasuries could unwind, especially on the Bitcoin side.
I think they will, right? And that's what's going to be the additional pressure here. So we've seen the benefit of these financial products, right? Yeah. We saw the ETFs for Bitcoin. We saw the DATs for Bitcoin. And, it pushed it to an all-time high before the halving, which is outside the norm of these market cycles. That's never happened before 2024.
Crazy.
So, I think that the downward move is also going to be exacerbated, right? And that's why I say volatility, and we could see a $20,000 Bitcoin if you had the unwind at scale and the destabilization of Tether and people. We also haven't seen the rotation for the alt season at this point either.
Yep.
You tend to get a retrace for Bitcoin where it comes back up after it's hit all-time high. I don't know if we have or not for this cycle because we're in uncharted territory. Like I said,
this is definitely going to be a year to be doing smart investing. It's not going to be a hodl year for some of these assets. You really need to be watching every macro trend, every little nuance in these global positioning, as well as precious and stocks, I think, that are going to play into this, especially on the AI trade. And then the debasement side against the situation that we're dealing with on inflation.
Well, I think they're going to shore that up. I think they will roll out something to back our treasuries. I mean, we had Judy Sheldon talk about the 50-year gold bonds that they're going to roll out on the 250th anniversary of the U.S. I do think that in 26 we are going to see stabilization of our currency, which would be great. But it also removes a lot of the benefit that people have been able to use debt and continue to refinance it and pay back with cheaper dollars later. If you've understood that system for the past 50 years, you've done really well. If you have stabilized money, and I talked about this in a video I put up the other day, the asymmetric bets and the pace at which people will become wealthy, I think is going to be significantly elongated. I don't think you're going to have people that are able to, outside of startups and early stage investors.
That's the thing I talk about is that I think the altcoin opportunity is probably over. Unfortunately, the ICO phase, I mean, there will be a handful of crazy wins, but the rarity will be so narrow. It's going to be in these tier one and blue chip assets that move 20, 30, 40% a year, or if you get a flyer, something like what we're seeing with precious metals, right now.
Yeah, I think over the long term, markets will have a regression to the mean, and they'll have, they'll follow GDP. We've got a lot of emotions in the market now, and you also have a lot of manipulation with derivatives and paper.
No doubt.
So, once they move the COMEX over to, they do 589 on the COMEX, and you have to back it and audit it, and they can't issue additional paper. There's just going to be a lot of things when this stuff moves on chain that will keep the volatility out. And the volatility is how people make money.
Yeah, for sure. Yeah. Let me do this. I'm going to get you back on the show after the Clarity goes through, because I think the Clarity Act is going to be a pivotal point in how not only this market is going to respond, but I think in general, how investment, including institutional capital, will respond to the space. So we'll definitely have Jake Claver back on the show post Clarity Act for sure. Jake, where can they find you?
Yeah, so across most social media, just Jake Claver. Over there on Twitter, I'm beyond_broke. It's my moniker there.
I love it. Beyond Broke, baby.
You can go to, we have a mastermind, beyondbroke.com. If you do want to work with us on the family office or the wealth management side, you can just reach out at digitalfamilyoffice.io. digitalfamilyoffice.io. We will drop that in the show notes, and of course bring up Jake's website right here so you guys can learn a little bit more about Digital Ascension and what they're doing. Jake, thanks so much for coming in on the show today. I appreciate it. Absolutely, brother. Thank you for having me. It's always a good time, and I think people get a lot of value from it.
Yeah, it's going to be a good one. You guys know what to do. Make sure to like and subscribe. If you are not one of our subscribers, you should be, and share this, because I think there's a lot of people who are coming into this space right now, I know, and they need to understand how big of an opportunity this is. You guys share it out there. We'll catch you next time right here on the XRP Pod. Take care.